Ladies and gentlemen, welcome back. This is Christopher Aaron, your host for this special edition video update because there is an alert for a stock market crash on our hands. I want to show you what is happening here on the charts. Such an important time. It looks like Russia is invading Ukraine as we are speaking. That is at least what the news is reporting. And so let's look at how the markets are responding to this and what we should do to consider protecting ourselves here. Very briefly, make sure to hit the red subscribe button and the bell icon so that you will get notified when these videos come out. And make sure to follow our account on Twitter, which is iGlobalGold. Because some weeks I don't have a chance to post a full video, but I often have a chance to post little things on Twitter in between. iGlobalGold. Legal disclaimer, 1 second. So we are looking at the rumblings here of the war between Russia and Ukraine heating up. And so today was a very negative day once again for the stock market, down almost 2% on the S&P 500. And the thing that I want to point to your attention, actually a couple things here as we look at the intraday price action. Notice how the bonds are not serving, U.S. bonds are not serving as a safe haven. Bonds were down today with stocks. This has been our grand thesis for about 6 years, that there is going to come a point where both stocks and bonds fall at the same time, which really has not been witnessed until going back since the early 1970s. Almost 50 years has it been since we've seen a sustained period where stocks and bonds are falling together. Obviously, this is just one day, but sometimes one day starts the beginning of a trend. So we're following this very closely. And look at what the outperforming asset classes were today. Silver miners, gold miners, and silver. Look at this. The mining sector, which sometimes can get pulled down with stocks, they buck the trend today. So if you have no exposure to the gold or the silver miners at this point, the writing is on the wall. This is your chance. I still do not think it is too late. I'm going to show you why when we get toward the end of this video. First, let's talk about the crash alert, which is on our hands right now. This is the S&P 500 for the last 2 years here in the United States. Since the crash of the coronavirus, the almost linear recovery, let's bring up our color key because there's a lot of colors going on here. The most important point that I want to draw your attention to for the last several months was this breakdown right here. You can see the lower rising trend, rising, boom, broken right there. From the break of the rising trend, we have now seen a horizontal support level come in here right above the 4,200 level, which is just where the stock market closed today. So 4,200, this is the fourth test. And guys, I'm watching this right now in the overnight session in Asia, and we have sliced through this level. So we'll talk about what this is going to mean in a second. But we have sliced through this level on the news of the invasion of Russia into Ukraine. And so we have to start to take a look at this pattern as being what we suspected it was going to be right here at this breakdown. If you go back to some of the videos produced over the last 2 months, I was saying, hey, look, guys, if you're heavily exposed here in the U.S. stock market, this is the time to be trimming back your holdings and get invested in precious metals. So we did see that breakdown, and then the pattern shaping up was this. The left shoulder, the larger head, and the right shoulder above this critical support right here at 4,200 and change. Now, as we are speaking, as I said, this support is actually failing. It's failing in front of our eyes. Now, what we like to see is at least a weekly close below the trigger level, which let's define it. It's actually, to be specific here, it's 4,222 on the S&P 500 index. That is the absolute lowest band of these three support levels right in here, these three black arrows. The absolute lowest that was 4222. As you can see, for the close today, we are below that level. And as I said, here in the overnight session in Asia, heading into Thursday morning, we are decisively below this level. So it looks like the crash is underway as we are speaking. Now, as I said, I like to see at least a weekly, if not 2 weekly closes below the trigger level to confirm this. Sometimes we can see these daily spikes below and then a recovery. So we want to see 2 weekly closes below the trigger level, and then that will give us the following scenario. We will take an amplitude measurement of the head portion of this pattern right here, which is roughly 600 points. We will subtract that from the breakdown level, and we will arrive at a target here of approximately 3,600 on the S&P 500, which is roughly a 25% stock market crash from the peak here in just a couple months. Now, this would be the defined target. This doesn't mean that it's the ultimate low. We could well indeed go significantly further down from this. The point of this is the expected target based on the intermediate term pattern only. Beyond the intermediate term, we're talking the next 1 to 2 months. Beyond that, we have to take a step back and say, do we now have some targets for significantly lower indeed? This is the expectation as long as the trigger level holds here on a weekly close, especially 2 weekly close. So it's watch out right now because this is happening in real time as we're speaking. And then we get into some macro discussions. We have to talk about the big picture. Look, if this crash is underway here, there is a Federal Reserve meeting coming in just 3 weeks where they have been expected. In fact, the market has already priced in that they will be hiking rates starting here on March 16th, and that they'll be hiking throughout the year 2022, at least 5 interest rate hikes. And so a thinking person has to step back and ask themselves, do you think the Fed is actually going to hike interest rates into a stock market crash or into a war between Russia and Ukraine? Are you serious? Do you think the Fed's actually going to hike rates into this scenario? Remember, the market has already priced the hikes in. So what is going to happen? First of all, let's answer this question. Do we think the Fed is going to hike into this scenario? Well, let's ask our friends Wayne and Garth. No way. Thank you, Wayne. Thank you, Garth. The bigger point here is that since the market has already priced this in, what is going to happen when the market is then wrong? It is going to be gold, silver, and the gold and silver miners on steroids, on absolute rocket fuel steroids, because they've already priced in the higher interest rates. And so then when we abolish that, they're just going to shoot, they're going to blast off. This is going to be one of the few times in my career that I would actually be willing to say I expect a blast off when the Fed reverses on its interest rate hike policy here. You know, I don't say that every week or every month like a lot of the precious metals analysts do. But when we get the reversal of the policy there, that is where that is going to happen. So now we come into, is it too late to protect oneself with either gold, silver, or the gold and silver miners? And if you think it's too late, if you think you've missed this, the damage is already done, I want to update you on the XAU to S&P 500 ratio. We were just looking at the S&P 500 in isolation. Now we're looking at it as a ratio compared to the sum of the gold mining complex and the silver mining complex. And what you can see here is that the gold miners are near the cheapest that they have ever been relative to the US S&P 500 stock market. From this level, just to get back to a known previous level where the miners peaked near the year 1980, we would need to see the average gold miner rise by 3,000%, or the S&P 500 would have to fall by 96.6% from where it is right now, let alone the damage that's already been done. We're talking about from this point. So if you think you've missed the opportunity here to buy gold, silver, and gold miners, no way. There is still a massive opportunity for life-altering revaluation that is set to come here. That is what the data tells us. I'm not making up these data points. Look at it right here on the chart. This is the level that the precious metals miners peaked at going back toward the 1980 peak in gold and silver, and we are closer to a bottom in the precious metals miners now relative to a potential top. The opportunity is still ahead of us, and this is why I publish the research that I publish. I believe in this, and the data supports it. If you are an open market precious metals investor, you will want to check out our Precious Metals Intelligence service. We produce weekly videos to update you, such as you're seeing now, just a lot more in depth, covering the stock market, gold, silver, the US dollar, the rest of the commodity spectrum. And this includes the exact open market gold and silver miners that we are buying and selling here. You get flash updates going right to your inbox with this service. If you are a high net worth investor and you want to try to achieve the highest form of leverage possible in this sector, then you must check out Elite Private Placements. In Elite Private Placements, the way that we achieve more leverage even than in the open market positions, you saw today the open market gold and silver miners led the pack. They served as the safe haven today in the crash in the S&P 500 that is underway. But if you want even more leverage than this in Elite Private Placements, because we invest in these gold and silver miners via private placement, we receive free warrants with every single investment. And the free warrants get you nearly twice the upside compared to the open market buy and sell signals. You have to have a higher level of discretionary net worth in order to do this. You can find all the details on our website about exactly how much you need to have available to invest, et cetera, et cetera. Remember, you get a free subscription to Precious Metals Intelligence with the Elite subscription, so you won't be missing out on any of our videos or the other open market stuff that we're doing. This is if you want to try to capture that highest amount of leverage with the warrants. These warrants will not be available forever. My prediction is after gold blasts through 2,000, perhaps 2,300, the warrants are not going to be available anymore. So make sure you're gathering them now while there still is chance. Once again, hit the subscribe button. Thank you for supporting us on Patreon. If you would like to speak to me one-on-one, I can work with you on an individual basis. Remember, I take no funds and no fees from any of the gold and silver miners, any of the bullion dealerships. No way. I work for the benefit of individual investors who would like to speak to an independent analyst. That's all I can do, and I look out in your best interests. So this is a really scary time, if you ask me, because you have the confluence here of governments clamping down on individual liberties related to the coronavirus. You have war apparently breaking out between Russia and Ukraine. We say a blessing for all those people who are going to be dealing with this war firsthand and who will lose lives. And please protect yourself as far as your health, as far as your physical safety, and as far as your finances here. That is what we're here to do on this channel. And we do want to speak about some of those other topics too over the weeks and months ahead. Right now, you just got to make sure that you have exposure to gold, silver, and the gold and silver miners in sufficient fashion, because the data shows us that the upside is still ahead in that sector. If it wasn't, and when the upside is done, when those ratios revert to more of a mean, I will be changing my focus to other sectors. Right now, the upside is still ahead here in the precious metals. Take care of yourself. Stay healthy. Make sure to subscribe, and I will see you for the next video soon.